Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for June 22nd, 2017. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. We've been watching the 24.43 half as a key level there. When price popped above it, we were talking about any failure to hold it would likely rotate price back toward 24.24 quarter. We've gotten very close here over the last couple of days. We still remain in a bullish trending market. But as I mentioned before, falling below 43.5 put this ES right back square inside that range, and there's not really a good edge inside this range at this time. That's why I mentioned yesterday, not really a whole lot to do on a swing basis. We're not at an edge. Instead, we're right at the center of that HVN of this micro composite range. So overall, we're still in an upward trajectory. Price continues to hold above the previous month's close and also above that 2400 to 2404 half key zone. We may continue to push down into that zone at some point, and if we do, again, it would likely be another buying opportunity. Once or should a failure of 2400 occur, that's when we may see a bigger rotation to the downside. So right now, stuck inside the range, not a whole lot to do, again, on a swing basis. But should we rotate a little lower, it could be an opportunity to buy for another rotation back up. So if we take a look at the intraday time frame right now, you'll notice that prices have been rather quiet in this range. The previous session didn't have a whole lot of volatility, and we're basically in a fade the edges type of situation. So here's 24.34 half. That's the previous week's close there. Basically, that's an edge to fade. So if price gets into this zone, it could be an opportunity to fade it back toward 24.30 and perhaps 24.28. Should price drop down below 24.28, it could be, again, another opportunity to bring it back up. So it could be a very short-term fade the edges type of play right now. But again, not a whole lot of movement or volatility at this time, so you can be much more selective and cautious about your trades that you're taking. If we take a look at crude oil, this one has been one that has continued to be very, very weak. We're now outside the larger key range, and we've reached many of our downside targets now. The last one being basically 42s. That is the edge of the largest range that we have. And below there gets us into 39s, which hasn't been tested much in the last 5 years. So right now, what you see is price again rejecting off of 45.20, as we mentioned, could be the case, and we've seen a push downward into 42s now. Very nice dramatic continuation of this very weak trend here. And what I mentioned yesterday is now that we are outside 43.75, now is a time here where we could begin to see the development of a rejection signature. At this time, we're still in a downward price discovery phase, and no rejection has been seen yet to speak of. So this thing is still poised downward. I would say a break back above 43.20s could offer a little bit of a bounce, but right now, again, the direction is down. So any bounce could still be a selling opportunity until we see that rejection signature. So this has been a very, very bearish move. Every single week we've started this thing with a failed range expansion, and that has led to clear and steady selling pressure. So we'll continue to watch this development right now for signs of a rejection, but until then, we're still trending lower. On an intraday basis right here, you'll see that price has pushed higher off of recent lows. Yesterday's lows, 42.05 here. Price back above the previous session's close and is now holding, but it's inside the pivot range for the day. And in a downtrending market, when price hits the pivot range, it's an opportunity for bears to trap and return to lows. So right now, again, not the greatest of markets at the moment, still a downtrending market. So any pops up here could still be selling opportunities for another round of weakness, but nothing clearing away right now at this moment. If we take a look at the NQ and bring it up to a higher time frame, one thing you'll notice about the NQ is that we have finally reached the 5800 key level for a retest from below. That's been a big time level to watch. And as you remember, when price got the big impulse move down, our primary idea was to defend 5800 to 5815 for a shot at seeing new lows. Price was front run in that area by 11 handles, and then price dropped to a new low barely and rejected. So now we're back at it, and you can see right here, at least on first blush, bears are defending the previous month's close, the previous month's high, right in that 5800 to 5815 zone. So on the first move right now, bears are defending, and again, that could lead to another quiet rotation back within the range. As I mentioned before, all of this activity right here could be released to the upside if price is able to really push to those 5800s, 5815s. We could start to see a stop run that leads to a retest of 5900 and perhaps a continuation into 6000. So right now, bears are still trying to keep these late participants trapped for a shot at pushing this thing downward. And 5800 is the key pivot to watch, so watch that level on the swing basis as we continue throughout the rest of the week. On an intraday basis right now, after the recent rally in the previous session, which was kind of a slow-moving rally all the way up, we have seen price kind of shoot higher, form an impulse high, pull back, form that impulse low, and bounce back toward the mid. This could be a very nice impulse range, key range that we can now use the rest of the day, watching the high, the low, and the mid, and you can watch for fade opportunities at these edges. But this is going to be the key level here, or the key range that allows us to find those targets once we get outside that range. So watch that range as we play out the rest of the day. Taking a look lastly at gold and bringing this up here. One thing we talked about, especially in the trading room before we closed the session yesterday, was we wanted to watch how price was going to respond to 1250. As you know, this thing has been trending downward. Every pullback has been a selling opportunity, though we haven't had many. And what I mentioned was watch 1250 here. We have 2 days here where we formed narrow range. And if price were to push above 1250 and then fail to hold above 1250, that could be a selling opportunity into 1229.70. So right now, price is holding above 1250 at the moment. And again, if bears are able to reject those prices above 1250, that could be another selling opportunity to new lows into 1229.70. So taking a look at the intraday time frame, you'll see how price is currently behaving above 1250. We had the rally above it. Here's a rejection above the previous close of the week, and then price rotates back to 1250 where bulls come in and defend it. So we're now starting to see how this thing is playing out. Again, this 1250 right here, if crude oil, gold happens to break back below that zone, it could become resistance that leads to a move into 1229.70. Clearly, holding above 1250 and failing to get back below it would suggest that this thing is ready for at least a bounce back toward 1260. So right now, this is the key pivot to watch as we head into the rest of the day. All right, that's it for now. Let's see how this thing plays out the rest of the session. Good luck and trade well.